FX Nation, what's up guys? Welcome back to the channel, welcome back to another video, and of course welcome back to Trading with a Purpose. As we continue our journey, we've been breaking down our four pairs. We've already broken down pound USD and gold, and so now we move on to our next pair. So now we're going to be breaking down pound JPY. We're going to find out where we are in the market structure here with the peak formations, so we can go ahead and obviously start following it and moving forward with this particular pair. So without further ado, let's get right into this video. So let's go ahead and just start out. We're going to start out from basically the beginning of 2025. All right. Remember what we need in order to get a peak formation, right? So if you don't remember from the last video, here are the things that we need that create essentially a peak formation. All right, so let's get into it and let's make it real simple. Let's start from the very top here. We know that essentially this is going to be our peak formation high, right? That's going to be our peak formation high. Let's just do the simple stuff and get it out the way so we know where we are. We know that this is probably going to end up being a peak formation low, all right, just because obviously it's the bottom of the cycle. So that's going to be our peak formation low. So we have those two down. Now the question becomes, what do we do next, essentially, right? So let's go ahead and start to work this side first, okay? Let's start this side first. So let's go ahead and start to essentially figure out, okay, what is our ADR? And then where we can start breaking this up, because I do believe there's multiple cycles from this peak formation to this peak formation low. So let's get into that. All right, so here we have our first section that we're working with. We know that we have peak formation high here, all right? And then now it's just basically trying to find, okay, where is peak formation low? So the first thing is, okay, where is the first crossover that we have? It's right here. Is this going to be likely a peak formation low? Probably not, because it's too close to the previous peak formation high. We could just simply double check that, and you can see we moved about 472 pips. The average range here, I want to say it's about 196, 199. So we're talking 2.4, 2.3 times ADR, so we know that that's not enough. Okay, now here's the important part that we notice is that we had a big retracement here. Okay, what do we do with the retracement? The retracement is really nothing, it's just a retracement, right? Is the retracement going to be, let's say, a failed reset? Okay, where it causes this to be a failed reset and this another peak formation high. Well, let's talk about that. If we were to use a fib retracement from the top here to the bottom and then see how far price retraced. Essentially, you can see that price retraced right to 786. Okay, so it's not a retracement basically because the market wants to grab orders that were sitting above the previous peak formation high. Okay, that's not what that was. All right, if you ask me, all that price wanted to do was essentially cover news gaps that were left open from news candles. So if we go back here, you can see there's big three pushes here, 1, 2, 3. All of them were super aggressive and left basically gaps on the candles. So I think that that's where price essentially wanted to come back and cover. Okay, so with that being said, we don't do anything here. We can let this be. Okay, if this were to go up higher and retest this previous peak formation, then we can go ahead and obviously it would be a peak formation high. This would be a failed reset and we move on. But in this case here, we could verify essentially that it went right back up to 786, even if it went to 618. Same type of scenario. This would actually make a really good swing trade opportunity. If you don't know what I'm talking about, check out the previous video. It's easy 1 hour setups, I believe I did a couple months back. and you can see what I'm talking about. But anyways, so we keep it moving, okay? This is just part of the movement. So now, where is our next possibility for a peak formation? Well, it's going to be here, obviously. Now, I want you guys to pay attention to the actual movement. How big is the move that we've made here? So 883, we divide that by the average, which is still in the 190s, 195, 194. So it gives us right around 4.5 times ADR. If that's going to be the case, we obviously could see immediately, right, that we essentially go back down further. Now, that's the first question is, if this is going to be a peak formation, okay, what is this going to be? And then what is this going to be down here? Because obviously price, goes back up again. Now, if we just do a quick calculation here of math, right, we have 371. Obviously, it's 194, so we know for sure this is not going to be enough for a full cycle. Essentially, what do we have here then? All we have is we have this as a peak formation low, and then we have this as a failed reset, and then we have this as a peak formation low. What makes this a failed reset is the fact that we basically went down and retested this previous low, and you could see that as soon as we retested the low here, we spent not very much time here, maybe a day and a half before reversing. With that being said, let's move on. We have failed reset, peak formation low, and then now essentially we're just waiting for a peak formation high to form. Now, what we're looking for here is very likely this right here is going to be a peak formation high. We just need to verify it obviously with how much movement we're talking about. So 538 is the movement, and what is the average ADR here? We're now in the 180s. We're no longer in the 190s, 200s. We're now moving slower to around 180 or so, give or take. If we do the math here, that's going to be right around 3 times ADR. So we know for sure that this is going to be another peak formation high. Peak formation high to peak formation low. We have a failed reset. We have another peak formation low. And then now we have a peak formation high. All right, so we had a crossover here. Notice how this did not cross over. It crossed over here. So now we just want to verify real quick, is that enough for a full cycle or not? Right? Is that enough for a full cycle or not? We're looking at 476. And then what is the average ADR? We're back up to closer to the 190s, obviously here. So right around 2.5 times ADR. So that is technically enough for a full cycle. So this could be right here, another peak formation low. Right now, obviously you can see what happens immediately after that is essentially it retraces and drops, right? So we know because it broke previous peak formation low, we should know that this is essentially going to be a reset. Okay, this will be just a reset. So this will be here a reset. So now we can verify, okay, is this enough? We're at 612. We take what's the average here. We're in the 194s from, give or take. So we're at 3.1 times ADR. So yes, that's a confirmation of a peak formation low, right? So now we just keep going. Now this whole time, obviously, we're looking for buys until we get another crossover, essentially. Now we got a crossover here in this area. Now is this going to be enough is the next question. So we're right at about 600, give or take, pips, and then the average is about 195s. We're at 3 times ADR. Obviously that's going to be another peak formation high here. We keep moving, moving, moving. We're probably going to get something here. All right, I believe that's going to be another one here. So if we take a look at this area here, I want you guys to just notice what happens. It's just a bunch of consolidation, 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 and then we get one quick whip, right, which is here, and then immediately reverses, right? And the question is, does it go up or does it come back down again? It goes up. So this right here could be potentially a peak formation. Again, we just have to just verify. So we're looking at 541. Okay, 541. And then what is the average? We're still in the 195s or so, give or take. So we're at 2.7 times ADR. So yes, this is another peak formation. Okay, this whole thing here is just a big peak formation low. So big peak formation low, and then again, we just keep going from there. Okay, we keep going from there. All this time, this entire time, you're looking for buys. This entire time, you're looking for buys. This entire time, you're looking for buys. You're just looking for buys, 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 buys. This entire time, you're looking for buys. Now you just had a crossover happened here. Okay, so obviously, if we do the math here, it's probably going to be 721. So we know, and we, let's say, divided by the average here, we're going to be around high 196s, 97s. We know that's 3.6 times ADR. So we know that's a peak formation high. All right. And so now, from this point on, if we play it, I believe we're going to get to current price action. So here we are right now. Okay. So now what we can do is, if we're looking for sells, because we got another peak formation high, okay, now we got to wait and see, okay, is this pullback here that's happening right now as we're looking at it, is that pullback basically going to be the same type of pullback that we had here? Okay, well, it's just very simple, right? You can use the fib, just put the fib on, okay, and just see where we are. You can see we're already at 618. Okay, we're already at 618 on this one. All right, and you can see kind of very similar scenario to where if we go back to this one here, you can see what started it here was major heavy push down, right? That left gaps open. So come back over here, same type of scenario looks to be playing out. Okay, very aggressive candle, and it's coming back to cover that. So we'll see what happens, okay, whether or not it actually stays there or not. Since we're talking about this pair, all right, what are things that we could possibly do to see whether or not, are we potentially looking for prices to reset to go higher or not? Well, I mean, very simply, you can go ahead and bring in a higher time frame if you want. So here is the daily time frame, right? And we can just see price is looking to want to go higher, but until it breaks this high here of this previous daily candle, right? Until it breaks this right here, which is right at what, like 194, like almost 194 even, a round number, right? You could see price action is literally retesting 194 000, 194 000, right? So it's retesting that area now. If we were on a daily chart to close above this, okay, to me, that would indicate very likely that prices want to now retest up here at around, let's say, 194,800, or basically retest the entire previous peak formation high. Okay, and then from there, if it closes above that, if the daily candle closes above that, that would indicate that prices want to go higher, and then obviously that would lead to a reset. As far as what you're doing now, if you're trading this pair or any pair that looks like this, okay, is you can, as long as you're staying, as long as price is staying within this range here, you can still look for sells. Okay, you have a stop loss. If you get stopped out, you get stopped out. Okay, stop trying as a trader, stop trying to look for perfection because it does not exist. There is no strategy out there that's perfect. I don't care what people say. Okay, I don't care if it's support and resistance, supply and demand, ICT, and all the other stuff that's out there. It doesn't matter. Trend lines, all that stuff. Okay, none of it is, including this one, none of it is going to be perfect. You're going to have losses no matter what. It's just a question of whether or not the actual setup presents itself in that situation for you to even take a trade. Okay, because you may have a situation where this pulls up, retests, and then drops off, right, as you would expect it coming from a peak formation high, but it may not have given you something to trade here anyway, so it didn't matter. So it wouldn't matter anyways. Okay, so it would not have mattered anyways. So if we take a look back here, all right, let's just go back here for a second. And let's say go back to a 15-minute chart. Okay, this is what it looked like on a 15-minute chart. This is what it looked like here. What does this look like on a 15-minute chart on that day? Here you go. This is what it looked like. Okay, is there anything here that you could have taken as a potential trade? To me, there's nothing here that aligns with my specific trading plan to take anything here for a sell. All right, that's the reality. There's nothing here that I would have taken as a sell setup. None of this stuff, none of this price action here for me personally fits any of my criteria for a trade setup at all. So very important to understand that whenever you make trading very black or white, okay, whenever you make trading black and white, it's a simple yes or no. The setup is either there or it's not there. Okay, and for me, it was not there. It would not have been there. Okay, now was there a setup on the next day? Yeah, there was a setup here for a reversal back to the 50 here. Okay, there is a setup here, right here, right? There's a setup right here, a reversal back to the 50, and you have a railroad track right here that you can use as an entry. Okay, so the setup itself would be essentially something like this. There's a 2-to-1 trade back to the 50 EMA. Okay, that's one trade. Okay, that you could have taken. Another trade that you could have taken, but for me would probably be risky depending on the risk to reward ratio and where your targets would be. But it would be like a type 4 pattern here during London session, where essentially you had the aggressive move and then a pullback to the bottom of the range, that, and then obviously you drop off from there. Okay, so the setup itself would be something like this. The part that I don't like about it is the fact that you did not have a pullback. And so for me, the risk is super extreme for me because you did not get a pullback, and so you're risking about 60 pips on that. Now for me, I would have liked the pullback maybe halfway up the candle. That would have been a way better setup for me, and I could see that now being a possible trade setup. Again, it just depends on the type of trader that you are. If you are an aggressive trader, okay, that just wants to be into the market and you're willing to put some risk out there higher than normal, then this could have been a setup for you. The way that you could have controlled the risk is to just lower your lot size. So instead of, let's say, trading, if you trade, let's say, a standard lot size, you could have minimized your risk by going a half a lot size instead. So you could still take, it would be essentially the same thing of taking a full lot size on 30 pips, but now you're taking it just on half. Again, you're basically minimizing the risk that you would normally take on your regular trades. But again, the important factors to any of the setups is, are they part of your trading plan, yes or no? And if they're not, you don't take them. If they are, you take them. Because at the end of the day, okay, as long as you're trading your plan that you've back tested and you know it spits out a certain amount, percentage wins, okay, over an extended period of time, you know, whatever, 5 years, right? You know that all we're talking now is literally probabilities. That's all we're talking about, is literally probabilities. If you know your trading plan and if you follow it and you know what it produces, what it can produce, okay, everything gets very easy, because now it's either there or it's not. The setup is either there or not. And so you have to determine yourself, what type of trader are you? And what are you willing to put up with? And what are you not willing to put up with? And that's just what it comes down to. If you think about this previous day here that we just passed, okay? We know we're looking for sells, right? What's the only setup here that would lead you to a sell setup here on, during, let's say, the London session, right? We can see that there's a type 2 setup here, right? We can see that. Okay, the question becomes, is it too risky to get into the setup? You know, that's what you have to ask yourself. Is it too risky to get into the setup? Well, eventually, yeah, it is, because to me it is, because you're looking at doing something like this. That's just ridiculous. That doesn't make sense. Logical. I look at this and that risk doesn't make sense to me. Okay, so it's automatic. There's no way. Okay, what would make sense to me would be taking it at least a 50% retracement. You know, something like that. Now that would make better sense, because a 2-to-1 is just here. Okay, that would make more sense. All right, and so if you're trading this, right, if that's what you want, right, you'd put a limit order here, and then if it retraces back, great. If it doesn't, okay, it didn't. And so what's the next possible scenario? Well, if you put a limit order here, that's 50% retracement, the pullback would have triggered you into the trade and you would have been fine, right? If you skipped it because the risk was just too big, hey, the risk was just too big, it's okay. You go into the New York session, you basically have the exact same thing, right? Where you have a big ass candle, okay? And I mean, it just doesn't, I get it. You see the move, right? You see the move and it's like, yeah, it's great, it paid off, but you don't know that price is going to do that aggressive move like that. You're not a wizard here. You don't know that that's what's going to happen, all right? And if somebody tells you that they know that this move is coming, I'm sorry, that's a bunch of BS, all right? So we've broken down pound JPY now, so now we know where we are in the cycle. So guys, I hope this video brought you some value. I hope that you got a lot out of this video by breaking down pound JPY. The next one that we're going to break down obviously is NAS 100, and then from there we're going to move on to literally following all 4 of these pairs on a weekly basis. We're going to talk about the setups on every single pair, so that way literally you can see what are the setups that are good, what are the setups that are bad on all of these pairs. We may find out at the end that some pairs don't work out that well. Some pairs work out better than others. And that's the whole point. All right. So until the next one, guys, we will see you in the next one.